Now, the next mortgage I want to talk about is the FHA mortgage. Oh, okay, Michelle, you're talking about my arena. Okay, so many of us have a FHA mortgage loan. It is absolutely a great mortgage for the purposes of people with lower credit scores. It is good for a low down payment. But the problem with the FHA loan is that we don't understand that for a normal conventional loan, you would need to put down 10% of whatever the mortgage actually is. So if you ain't got 10% and you do a FHA loan, what actually happens is you are locked into the PMI insurance. What is the PMI insurance? Anybody that does not have enough of the 10% to put down as a down payment on their mortgage, they have to have this PMI insurance. The PMI insurance is going to say that you have to pay extra money towards your monthly payment. You have to pay extra money for this PMI insurance, that if anything were to happen, guess who gets the balance? The mortgage lender, not you, because it is protection for the mortgage lender to say that if you default on the loan, then the money is going to go to the mortgage company, and you're already paying for the insurance because you didn't come up with 10% down towards the house. So with FHA, it's great for people with lower credit scores. You could even get an FHA. Most of them start around 580 and up, but we want to get you to a point where you are in a position that your credit scores are much higher than a 580. So let's make sure that we are not involving ourselves in FHAs if we cannot really come up with that 10%. I'm just saying that this is how the loans work, and we need to be made aware of what we are putting ourselves into and how we're going to pay the banks and the lenders back that we borrow from. And we need to know exactly what's going on while we're in the mix of having a mortgage. We don't want to be blindsided by something at the end of our mortgage or in between our mortgage or at the beginning of our mortgage to put us in a position where we cannot keep our homes. Okay.